Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, March 11, 2013. Well, another doji type candle today, an indecisive candle. Previous day's trading we had a doji candle, and for 4 of the past 5 trading days we've had doji type candles, and that really does say something about this market. A lot of indecision in this market in the near term time frame. And looking just past there, prior to these doji candles, we had indecisive spinning top type candles. So that also highlights the indecision. So a market that's really trying to make up its mind. We're not rallying, we're failing when the market rallies, but the market is also failing when it attempts to sell off. And this market is bound by very, very solid support and resistance. For today's trading, however, let's look at this candle. It is a doji type candle and a candle of indecision, so a candle that basically has no body. It's open and closed roughly within the same area, and that denotes neither the buyers nor sellers making net bullish nor net bearish progress. And if we look at the shadows in the top and the bottom, that represents downside price rejection and upside price rejection. So that's why it's a candle of much indecision. Today, the market attempted to rally above the 1577 important level of resistance, and that has been a level of resistance for all of these trading days throughout the last week and a half or so. And importantly so, the market's attempted to rally through there and failed to close up there, so it is an important level. The market also attempted to test to the Tenkan-sen, and for all of these days as well, the Tenkan-sen has acted as resistance to these highs and then roughly as a zone. So very important resistance for this market. But then important support down below here at 1559, and the market tested to there importantly, and then for the previous day's trading tested to there as well. So very solid support down below, and we have this large zone of support extending all the way down to 1523. So very, very solid support down below and strong resistance overhead. Now, if this market can trade up through the Tenkan-sen, the green line here, in a bullish manner and give us a bullish close up above there, there would be a possibility of this market rallying higher. But we do have solid resistance at the 1600 round number level, so that's important too. And then important resistance to the Kijun-sen, which is trading just below the 1625 level, around the 1621 area. So important resistance up there. Looking at the Kijun-sen, that's been pointing flat for quite some time, and it's really quite important that the market has failed to rally up towards the flat Kijun-sen. Very often a flat Kijun-sen attracts price action, but this rally has really been quite weak. No strong rally up to that area, so it does suggest the resistance around the Tenkan-sen here is very, very strong, and it does suggest that the buyers are very, very weak in this market, and that may give us a bit of a clue as to a potential sell-off, but no sign of that happening yet. Now, just looking at the Fibonacci extension, now that this market is still in this first time frame downtrend, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down. And here we've seen the market testing down below the 100% level for the previous day's trading and being very, very strongly rejected from there. So that does suggest that there is a possibility of a change of trend to the upside, so we do need to watch that. But today's trading, we haven't seen that happen with this inside day type trading, a candle of or a bar of indecision, and a doji candle as well. So certainly no suggestion that that trend is going to change, but the rejection from these areas does suggest that that is a possibility. If this market does continue trending down, then the 161.8% level here around 1553 coincides with this important swing low, so it does mean that that is a very, very solid area of support if the market does trend down to there. In terms of the Fibonacci retracement, we're now in an expansive mode of that. The market traded through the 100% level, was rejected from there. So that's suggesting that there is a possibility of a change of trend to the upside, but the trend is still down. So 161.8% level is down here, 1555, corresponding with this important swing low, and a very similar figure to what we're getting with the other Fibonacci technique. Now, in terms of Ichimoku, obviously a bearish market in the long-term time frame by trading down below the cloud, but also bearish in the medium term and fast term time frames by trading below the Kijun-sen and the Tenkan-sen. In light of that, and and in light of the weakness from the buyers, it's probably more likely that we could see a breakout down to the downside below the 1559 level. The only problem with that is that the market would be trading into this strong zone of support that has been highlighted and was a previous very, very strong area. So any move to the downside may be strongly limited by that, but this zone does extend down to 1523, so the market could trade quite a bit lower than where it's trading at the moment. As I've already mentioned, the flat Kijun-sen and the failure to rally significantly does suggest that the buyers don't have any strength. But if we do see the buyers become strong again, then we do have solid resistance at the 1600 round number. So a market that's not a good trading market. It is bound by very strong resistance overhead and close by, but then again very, very strong support, and it may take some time for this market to work itself out.